Welcome to El Oráculo Cifrado, the channel where we decode the secrets of money and cryptocurrencies that the banks don't want you to know. Today we're revealing why Bitcoin will reach $1 million and the invisible forces already driving it there. Stay until the end because this information could be the difference between building generational wealth or watching from the sidelines. Listen closely, because what I'm about to tell you is not speculation, not hype, not some internet dream. It's pure mathematics. It's economics. It's history. Bitcoin will reach $1 million. And in this video I'm going to show you exactly why. With data, with logic, and with the same reasons the wealthiest people on the planet already know and are using to quietly accumulate while you're still sitting on the fence. Today you're going to learn 7 concrete reasons, backed by real data, why Bitcoin not only can but absolutely has to reach $1 million. We're going to talk about mathematical scarcity, halvings, institutional adoption, the collapse of fiat money, value networks, and reason number 1, absolute scarcity. Bitcoin has a hard cap written into its code of just 21 million coins. There will never be more. Not the government, not any central bank, not any CEO can change that. Now think about this. There are roughly 8 billion people in the world, more than 50 million millionaires, and only 21 million bitcoins. The math doesn't lie. Demand will exceed supply in ways our minds can barely begin to process. Reason number 2, the halving. Every 4 years or so, the number of new bitcoins created is cut exactly in half. This is programmed into the code. It's inevitable and immutable. Less new supply, same or greater demand. Price goes up. In 2012, after the first halving, Bitcoin rose more than 9,000%. In 2016, more than 2,900%. In 2020, more than 700%. See the pattern? History doesn't. Reason number 3, institutional giants. Larry Fink, CEO of BlackRock, the world's largest asset manager with over $10 trillion under management, called Bitcoin a legitimate store of value. BlackRock launched its spot Bitcoin ETF and accumulated billions within weeks. When the global gatekeepers of capital open the doors to Bitcoin, the money that can flow in is of a magnitude that would make today's price look ridiculously cheap. Stop for a moment. Take a breath. This changes everything you think you know about Bitcoin's supply. An estimated 3 to 4 million Bitcoins are lost forever. In wallets without keys. On buried hard drives. In forgotten memories. That means of the theoretical 21 million, fewer than 17 million may ever actually circulate. The real scarcity is even more brutal than any model calculates. Now ask yourself, how many Bitcoins do you have? Reason number 4, the destruction of fiat money. Since 1971, when Nixon ended the gold standard, the dollar has lost more than 98% of its purchasing power. The world's central banks have printed tens of trillions of dollars, euros, and yen since 2008. Every time they print, the money sitting in your bank account is worth less. Bitcoin is the only asset in the world with a completely predictable and non-manipulable monetary. There is one man who bet his entire company on this thesis. Michael Saylor, CEO of MicroStrategy, accumulated more than 200,000 bitcoins using his company's money, issuing bonds, selling shares, all to buy more Bitcoin. Today his company is worth more than 40 times what it was before. He's not crazy. He's someone who read the data, understood the math, and acted with conviction when everyone else was doubting. What does he know that the average person still doesn't? Reason number 5, sovereign adoption. El Salvador was the first, making Bitcoin legal tender. Then Bhutan began mining it with hydroelectric energy. Then conversations emerged in more than 20 countries about strategic Bitcoin reserves. And when the United States, the world's largest economic power, began seriously discussing a strategic Bitcoin reserve, the game changed forever. Countries are buying. When will you start? Stop for a second. Imagine you're in 2010 and someone offers you Bitcoin at 1 cent. You say no because it sounds ridiculous. Today each one is worth tens of thousands of dollars. Now imagine we are at that exact same moment, but with $1 million as the target. Are you going to say no again? The biggest opportunity of your life doesn't arrive announced by trumpets. It shows up disguised as something you don't fully understand yet. Reason number 6. Network security. The Bitcoin network is today the most powerful and secure computational infrastructure humanity has ever built. To hack Bitcoin, you would need more computing power than all the world's supercomputers combined. Multiplied by 1,000. No army, no government, no hacker can stop it. This technological robustness has no historical precedent and is one of the strongest reasons smart. This video is possible thanks to Binance. Compra Bitcoin sin comisiones. Link in description. When Elon Musk announced that Tesla would buy $1.5 billion worth of Bitcoin, the price surged more than 20% in hours. A single tweet from this man moves markets in a massive way. But beyond the media effect, what this demonstrated is that the most innovative and profitable companies in the world see Bitcoin as a legitimate treasury reserve. When Apple, Google, or Amazon take that step, and many believe they will, today's price will have been a historic bargain. The stock-to-flow model, created by anonymous analyst Plan B, compares the existing supply of an asset to its annual new production. Gold has a ratio of 60. Bitcoin, after the last halving, has one of over 100. Historically, this model has predicted Bitcoin's price with a precision that is truly breathtaking. And according to this model, a price of $1 million is not a question of if. Pause. I'm asking you a direct question. If Bitcoin reaches $1 million and you have even just 0.1 Bitcoin, that would be $100,000. What would you do with that money? Would you pay off your debt? Buy a property? Give your family financial freedom? Visualize it. Because the difference between those who get wealthy with Bitcoin and those who don't isn't intelligence. It's whether they acted or didn't act while there was still time. Reason number 7. The generational shift. Millennials and Generation Z, the heirs to the largest intergenerational wealth transfer in history, roughly $68 trillion over the next 20 years, prefer Bitcoin over gold by a ratio of more than 3-to-1 according to recent surveys. These generations grew up digital. They don't trust banks. They understand technology. And they're stacking satoshis. When they become the economically the world's most respected economists, from Ray Dalio to Nouriel Roubini, though for opposite reasons, agree on one thing. The global financial system is under unprecedented pressure. Sovereign debts are mathematically unpayable. Trust in institutions erodes every year. In every historical crisis, capital seeks refuge in scarce, non-manipulable assets. Gold played that role for centuries. Bitcoin, with all its additional advantages of portability, divisibility, and verifiability, is taking that throne. Now the most important question. What do you do with this information? First, educate yourself deeply. Don't buy what you don't understand. Second, use the DCA strategy. Invest a fixed amount every month regardless of price, eliminating fear and panic. Third, use secure custodians or learn to use hardware wallets. Not your keys, not your Bitcoin. Fourth, think in a 4 to 10 year horizon minimum. In 2011, a famous economist called Bitcoin an absurd bubble when it was worth $30. In 2017, JP Morgan said Bitcoin was a fraud. In 2020, The same banks that declared it dead began offering Bitcoin custody services to their wealthiest clients. Those who mocked it in public were accumulating it in private. The lesson is brutal and simple. When establishment experts attack Bitcoin with the most force, it's because it threatens them the most. And here's the data point that surprises people the most: $1 million per Bitcoin might not be the ceiling. Kathy Wood of ARK Invest has models reaching 3.5 million per Bitcoin by 2030. Fidelity, in a leaked internal analysis, discussed even higher prices over 20-year horizons. When global capital, which exceeds $900 trillion across real estate, bonds, stocks, and cash, migrates even a small percentage into Bitcoin, the math produces numbers that today sound like science fiction. You made it to the end, and that already puts you ahead of 90% of people. Now you have two options. Close this video and keep living the same way, or take action today. Subscribe to El Oráculo Cifrado so you never miss an analysis, because we publish content that mainstream media doesn't dare to show. Drop a comment telling me how many Bitcoins or Satoshis you hold today. No matter the number, subscribe to the channel and ring the bell to never miss a video. Every week we publish information that can change your financial future.